already. The last major low that we're looking at here for Ethereum, by the way, and thank you so much for joining me, and hi to everybody in the chat, is this Fibonacci was drawn in from down there at those lowly lows of 309 buckaroonies, looking in there at the 23rd of September low or so, and then coming up here towards the high we had at the sort of 19th of January when we put in our new all-time highs. That's a nice significant area for a Fibonacci retracement point, and there's a few key things that we can see about this one just to kind of give us a basis to understand what would happen if we broke down past, for instance, this key area here at $1,000, which we will examine in more detail in a moment or two. First off, you know, the areas that we have to look at really in terms of the near-term time frame near-term basis is the 236 in there at this $1,150, $1,175 area. Now we know that in the last couple of days, jumping down to the 24-hour time frame, we've come down below that area, closed below it, then of course opened below it, and then come back up above, not getting a couple of consistent closes below. Indeed, we did see something similar over here when the Fibonacci was last lined up like that, coming down here, closing, opening and closing here, but then not really getting that follow through and bursting back up the way. So far we've gone and done the upward movement to satisfy the this now potentially being support again for us. Will we see it act as such should we need it to? If not, then of course we could be looking down towards these other targets. First off, let's see if we're actually able to break down past the $1,050 down to $1,000 area where we have our previous low coming in, and whether or not, of course, we have the more significant support and resistance operating on our favor again, as we have actually seen within the last 24 hours. So then after that point, if we do go down the way, now bearing in mind that there's a bigger chance that we won't close below this from a statistical likelihood point of view. Looking at this, we'd say that the chances are that we won't close below this. That's statistics for you. And who can trust them? Statistics can be used to prove anything after all. But, you know, if we did, and let's say that happens around about a third of the time, when you have a properly drawn on one, and let's just see if that's the case. Well, we did kind of come down here, but didn't get any follow through, so we didn't really break that at that point. Going down the way, no. 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 So as you can see, to say that it doesn't break it, 7 out of 10 times is fair enough, right? So there we go. And if we were to, though, at that point, whenever that's broken and we're getting a bit of follow through, there's a solid chance, an 80% chance that you're going to go on down the way and test a number of these down below. And of course, then that does give you a downside target coming at around about where the lower end of the Donchian channel is here on the 24-hour time frame. So it's a very scary point of view, that, and it could be that 30% pullback that we have been saying is going to happen at some point if we were to go down to any of those areas, of course, depending on where we dropped from. The neckline of this could be one of those areas for us, so let's bear that in mind. So between the 10,050 and 1,000 area, then we have a sort of neckline here. And what is this then? That's perhaps this Adam and Eve type formation that you have at the top here, if this were to be the case. Now, how does that line up with the oscillators down below and the DMI and the RSI and the stochastics, giving us that divergence here at that top, giving us that warning that perhaps we should be really bearing in mind the significance of any pullback structurally with maybe a bit more concern or prudence perhaps than you maybe otherwise would have without that warning coming in the way for us. And the neckline lines up with more or less kind of where we're seeing the Donchian channel area for us just there. If we jump up to a bigger time frame such as the 2-day, then you can see then of course the 382 and the median line of the Donchian channel line up perfectly, as you would more or less expect, given the quite structured nature of this rise, which has been at parabolic at times throughout, really. In fact, you could call this whole thing parabolic, and it still remains the case. So if we do break that, then the first target to be looking to would be that area. Now that could operate as a bounce for us, and at that stage then we could look at the trend from a broader perspective and say, are we changing the direction of the trend? If we combine this analysis with the Bitcoin analysis, by the way, just for a quick interlude, and if you are just joining me, hit that like and subscribe button, I appreciate it. You can see here that versus Bitcoin, what we've actually done is really managed to break past the 618, go up towards the top side, and in fact, you know, in terms of all of the Fibonacci targets on this thing, we've beaten them all so far, and we're looking towards the maybe perhaps, you know, if we can take out this one area, which would be your next target if this bullishness that we're seeing continues, then you're looking up towards 0.05, 0.06274. First off, 0.0406 being a big enough challenge for us, and that's a massive percentage move away from where the prices are right now, looking at 8%, of course, big enough from where we were in terms of earlier on as well, down as low as this point, coming up towards that 406 area is a 14.5% move. So there's plenty of trading to be done here, lots of volatility, but could we see that kind of kick off? And if we do take out that area, and then of course this forms this, you know, looking back the way, what that means is that this was indeed some sort of cup with handle, although of course this doesn't really work along those lines. It doesn't work in terms of the volume, it doesn't work in terms of the previous trend, whatever else. That's completely besides the point. I'm just kind of showing you in terms of the structure and how these things all link together. By the way, at this stage, that would look like that because where did we come down to in the pullback from the lows to the highs? Well, it was around about that 50% area, and that would be a nice handle. But of course, if this doesn't work with that previous trend, scrolling on over towards that direction again and seeing what else it lines up with, you know, then scrolling back the way, you see there's this dip here with a rise, and then putting the whole thing into context, what that actually means is you've got a shoulder perhaps ahead, and then a shoulder over here with a neckline here at that crucial area that we spent the first couple of minutes talking about in there. What are the precursor towards that? Well, you have this downward trend here. This is what you would expect to see in advance of inverse head and shoulders, and it's huge, you know. And overall, the move off the back of this thing takes you from, excuse me about the sirens outside, but they're getting excited about the prices. Lo and behold, the target that we mentioned before at 0.062714. So that's how you get from here to there in terms of that happening. And it would be interesting to see if there was continuation in terms of this downward movement in terms of Bitcoin, while we saw sideways or upwards in terms of Ethereum. And then, of course, that alt season type scenario starts to play out, which is the one, it would be the first time really, you know, in all honesty, that we've seen that happen since, well, the other alt season. So 2018, really, there was it rhymed, but it wasn't the same in August, you know, in that run up to August with the highs, but that wasn't really the same sort of thing. If that's what we're looking at, then that would be interesting to see. In terms of the low term time frames, I don't know what you could be possibly wanting really beyond looking at some, just, you know, looking at this V for recovery and saying, well, if this is a sort of V for recovery, then we'll need to see this remain in place by not taking out the low of this Donchian channel over here, or of course the 236 coming in there at 1224. If we actually do that, and at this point here, then you're looking down the way, and of course this would just simply be a higher low any point up above in terms of closures, this 618, which is in at this point just here. It's not actually visible in that Fibonacci. Let me just bring it back in again, is for us 0.618. there we go, there she is. So see, anything where we come down here and just test and go up a way, then that would just be simply a higher low from a broader point of view. This doesn't look so much then at that stage like, you know, anything particularly V-shaped recovery about it, because ultimately in terms of this thing here, the sort of the V of the V has to, you know, we're still not there in terms of the E part of the V overall, but you know, we're on the way towards doing things, and that's why those key areas have been discussed in detail. Okay, cool. So there we go. That's probably the best technical analysis that you can get for Ethereum, and lots of it was based off of the knowledge that we got from looking at the Bitcoin chart beforehand, and giving us a nice fertile bed of soil to plant our seeds of knowledge within. Cool. So let's just jump on over towards Link USDT and then make the next stage of that comparison. So what did I say at the end of the Ethereum one there when I was talking about the part of the V? Then well, what do we see here with regards to the V of the V on this one? Well, we see very much that the E is actually managing to supersede the price action of the V, and we're now looking at the high 21, 21